Ever wondered how billionaires keep crushing it at the top? Spoiler alert, it's not by sheer luck, folks. It's all about making those smart, calculated money moves. Today, we're diving into the top investment blunders they dodge and the genius strategies they use to grow their fortunes. We're tearing down the Wall Street curtain and giving you a backstage pass to the Billionaire's Playbook. No more financial jargon. We're talking real, actionable tips to level up your investment game. So whether you're just getting started or your portfolio's already got some serious bite, stick around. This is going to be epic. Look, everyone makes mistakes, even billionaires. The difference is, they learn from them and from others, fast. They understand that every dollar wasted on unnecessary fees or risky bets is a dollar that could be growing their empire. So what are these costly blunders that even the savviest investors try to dodge? First up, emotional investing. You know what I'm talking about, that knee-jerk reaction to sell when the market takes a dip or jumping on the latest investment craze without doing your homework. Billionaires? They're not about that roller coaster life. They stay calm, cool, and collected, making strategic decisions based on logic, not fear. Next, putting all their eggs in one basket. Diversification, folks, that's the name of the game. Billionaires understand that spreading their wealth across different asset classes is like having a financial safety net. Real estate, stocks, bonds, you name it. They're not afraid to branch out and explore different avenues. And speaking of spreading wealth, let's talk about taxes. Now, nobody likes paying taxes, right? But billionaires, they're not just thinking about today, they're thinking generations ahead. They're masters at utilizing tax-efficient investment strategies to protect their hard-earned fortunes. Think trusts, foundations, charitable donations. They're playing chess, not checkers. Another common mistake? Falling in love with an investment. Listen, I get it, we've all been there. You find a stock you believe in, it's your baby, you're emotionally attached. But billionaires, they're ruthless when it comes to cutting their losses. If an investment isn't performing, they're not afraid to say you're out and move on. Now let's talk about timing the market. Trying to predict when the market's going to go up or down is like trying to predict the weather 3 months in advance. Good luck with that. Billionaires understand that time in the market is more important than timing the market. They're playing the long game, folks, focusing on consistent growth over quick wins. And finally, one of the biggest mistakes even seasoned investors make, not having a solid financial plan. Think of it like building a house. You wouldn't start without a blueprint, right? Billionaires have a clear vision for their financial future, they set goals, and they work with experts to create a roadmap to get there. Remember, investing is a marathon, not a sprint. It's about making smart, strategic decisions that will help you build wealth over the long haul. So, learn from the mistakes of others, avoid these common blunders, and who knows, maybe you'll be swimming with the sharks one day. Let's talk fees, folks. You know those pesky little charges that seem to eat away at your investment returns like a pack of hungry wolves? Billionaires? They understand that even seemingly small fees can add up to a mountain of money over time. It's like death by 1,000 cuts. You might not feel it at first, but eventually it takes its toll. They're not throwing their money away on high-priced financial advisors or actively managed funds with exorbitant expense ratios. Nope, they're all about keeping more of their hard-earned cash in their own pockets. Remember, it's not about how much you make, it's about how much you keep. So, how do they do it? Well, for starters, they're not afraid to negotiate, they know their worth, and they're not afraid to ask for a better deal. Whether it's brokerage commissions, management fees, or even those pesky ATM charges, they're always looking for ways to minimize their costs. Another secret weapon in their arsenal? Index funds and ETFs. These low-cost investment vehicles track a specific market index like the S&P 500, providing broad diversification without breaking the bank. It's like getting the whole buffet for the price of a single dish. And let's not forget about the power of compound interest. It's like magic, folks. The longer your money stays invested, the more it grows, and those savings from lower fees, they compound over time, turning into a financial snowball that just keeps getting bigger. Now I know what you're thinking, but Kevin, I don't have billions to invest. And you know what? That's okay. The principles are the same, no matter the size of your portfolio. Every dollar you save on fees is a dollar that can be working harder for you. So, take a page from the Billionaire's Playbook and start paying attention to those fees. Ask questions, shop around, and don't be afraid to negotiate. Remember, the fee is the enemy, and the more you can minimize it, the more money you'll have in your pocket at the end of the day. Let's talk about diversification, folks. Now, you've heard the saying, don't put all your eggs in one basket, right? Well, in the world of investing, that's not just a saying, it's the gospel. Billionaires, they live and breathe diversification. It's the cornerstone of their investment strategy, and for good reason. Think of it like this. You wouldn't build a house on just one pillar, would you? No, you'd want a strong foundation with multiple supports to keep it standing tall, even in the face of a storm. Same goes for your investment portfolio. Diversification means spreading your investments across different asset classes, sectors, and geographies. It's about not putting all your money in one stock, one industry, or even one country. Because let's face it, the market can be a fickle beast. One minute, tech stocks are soaring high, the next, they're plummeting back to earth. By diversifying your portfolio, you're essentially hedging your bets. If one investment takes a hit, you've got others to cushion the blow. So, how do billionaires diversify their portfolios? Well, they're not afraid to think outside the box. Sure, they've got their stocks and bonds, but they're also investing in real estate, private equity, venture capital, commodities, you name it, they've probably got a piece of it. They understand that different asset classes perform differently under different market conditions. When stocks are down, bonds might be up. When the US economy is sluggish, emerging markets might be booming. Diversification is all about finding that balance, that sweet spot where your investments are working together to create a smoother, more resilient portfolio. It's about weathering the storms and coming out stronger on the other side. Now, I know what you're thinking. Kevin, this all sounds great, but how do I actually diversify my portfolio? Well, it's easier than you think. Start by taking a good hard look at your current investments. Are you too heavily invested in one particular stock or sector? If so, it might be time to branch out. Ready to take your investment game to the next level? Hit that subscribe button and join our community of savvy investors. Don't forget to like and share this video if you found it helpful. Let's diversify and conquer together. Alright, let's talk about market trends. You know, those daily ups and downs, the breaking news headlines screaming about an impending recession, the so-called experts predicting doom and gloom. It's enough to make anyone's head spin, right? But here's the thing. Billionaires, they don't buy into the hype. They're not glued to their screens, obsessively checking stock prices every 5 minutes. They understand that the market is driven by emotions, fear, and greed, and they refuse to get caught up in the frenzy. Trying to time the market to predict when to buy low and sell high, it's like trying to catch lightning in a bottle. Sure, some people get lucky, but for every success story, there are countless others who got burned. Billionaires, they're playing the long game. They're not interested in short-term gains or quick flips. They're looking for investments that will stand the test of time, companies with solid fundamentals and strong growth potential. Instead of chasing the latest hot stock tip or reacting to every market fluctuation, they're focused on building a diversified portfolio that aligns with their long-term financial goals. They're thinking years, even decades ahead, not next week or next month. Think of it like this. The stock market is like a roller coaster. It's got its ups and downs, its twists and turns. But if you close your eyes, hold on tight, and ride it out, you'll eventually reach the end of the ride. Now, I know it's easier said than done to ignore the noise, especially when you see your portfolio value fluctuate. But that's where discipline comes in. It's about sticking to your investment plan, even when the market is testing your nerves. Remember, investing is a marathon, not a sprint. It's about patience, consistency, and making rational decisions based on your financial goals, not on your emotions. So tune out the noise, focus on the long term, and let your investments do their work. So we've covered a lot of ground today, folks. We've talked about the importance of avoiding emotional investing, diversifying your portfolio, minimizing fees, and tuning out the market noise. But here's the thing. Knowledge without action is like a car without an engine. It's not going to get you very far. It's time to take what you've learned and put it into practice. Don't wait for the perfect time to start investing or for all the stars to align. The best time to start was yesterday. The second best time is right now. So what's the first step? Well, if you haven't already, sit down and create a budget. Understand where your money is going and identify areas where you can cut back and free up some cash flow for investing. Next, define your financial goals. What are you saving for? Retirement, a down payment on a house, your kids' college education? Having clear goals will help you stay motivated and focused on your investment journey. Now it's time to choose your investments. Remember, diversification is key. Consider a mix of stocks, bonds, and other asset classes that align with your risk tolerance and time horizon. Don't be afraid to seek professional advice if you need it. A financial advisor can help you create a personalized investment plan and guide you along the way. But most importantly, take action. Don't let fear or procrastination hold you back from building a brighter financial future for yourself. Remember, even small steps taken consistently can lead to big results over time. Now go out there and make it happen. So there you have it, folks, the Billionaire's Playbook to avoiding investment blunders. Remember, building wealth isn't about luck, it's about making smart, strategic decisions and having the discipline to stick with them over the long haul. Now I want to hear from you. What's your biggest investment mistake? Comment below. Let's learn from each other and keep those profits rolling in. Until next time, keep hustling and stay hungry for success.